Good morning, ladies and gentlemen. It looks like Japan has crashed the financial market, suffering the worst loss since 1987. Bitcoin dropped $10,000 in a single day. S&P 500, the Dow Jones, basically every market around the world has suffered losses. Australia had $100 billion wiped out. I bought on James Check to give us some calm. While not as bad as March 2020, feels a little bit similar, and every crisis there is opportunity. I'm extremely bullish. James, welcome back to the show. How are you, and what are your thoughts and the market moves the past 24 hours?
G'day, mate. Oh, mate, we're all fucked. It's all going to zero. That's that's the narrative that everyone's going to be putting out. But look, I mean, these kind of big sell-off events, they're an experience, right? It's part of the hodler's journey. This is definitely not the first time I've seen one of these. And also, I mean, I was talking about in my newsletter the other day. This is probably the most prepared I've been for one of these things. So I remember, March 2020 was horrific. May 2021 was a mess. Like, because you're just not ready for it, right? When it sells off, you're like, oh man, what? Like, is it like over? Is it over? But in this one, it was like, there's a whole lot of market forces at play. They're much bigger than any one analyst can kind of get your head around. But at the same time, it was like, we've been talking about how bad could this correction consolidation get for a little while now. So in many ways, it's about like just doing the computations before it happens. Because at the end of the day, markets are information. That's all they are. You can't change it. It's like a tide, right? You try and fight the tide, you get dragged out to sea. The only thing you can control your decisions. So thinking about your decisions, if this happens, this is what I will do before it happens, makes it much, much easier to survive.
Yep. And even on Twitter and Bitcoin X, I've noticed, there's a little bit of clickbait and people like, oh, the world's over, it's all imploding. But I think overall Bitcoiners are pretty calm and they have been prepared. On the show, we've been talking about $10,000, $20,000, $30,000 days, both to the up and to the downside in the last 24 hours. We got that to the downside. I think you're saying it was about $12,000. Which is, well, that's Aussie dollars, but that's it's pretty crazy in one day for it to be wiped out. I'll bring up the chart actually, and we can have a look what Bitcoin's done.
We were talking about it just before we went live. It's one of those things where it's like, fuck, we got something happen, because it's been just like doing nothing for such a long time. It's like, even though it's to the downside, it's like, yes, now we've got something to actually look at and talk about and like evolve and like analyze this thing, because choppy conditions are they're draining, right? So now we've at least got some momentum and some movement, which is good.
Yeah. I'll bring up this chart, but 100%. I think yesterday I put out a tweet straight away, like, finally there's a little bit of excitement here in the markets, and these red days are the best to be able to smash by stack and chill and make the most of it. But with your on-chain analyst, do you think that the bottom's in, or we got further to go down, or like what are your thoughts of where we are? Could we see another major move, like a wave 2 later on this week, as things maybe get a little bit worse if we don't get an emergency meeting from the Fed? I don't think that's justified just yet, but how are you sort of approaching the red price chart at the minute, mate?
Yeah, look, I think first and foremost, it is way too early to tell, right? So the nature of the beast with these kind of events, anybody that tells you that they know whether the bottom's in or that we're going lower or we're going higher has absolutely no clue, because the forces at play are huge, right? Whether it's the yen carry trade, whether it's, recession fears, whatever it is. Some of the biggest markets in the world, Forex, bonds, equities, they're moving in ways that you just don't see very often, right? So these are the kind of events where everything is on the table. So don't kind of anchor to, oh, it must do this, it must do that. The way that I like to look at these things, and I've got my set of rules, right? When I look at the on-chain data and how I kind of assess these things, I essentially don't want to buy my Bitcoin at a premium. I always want to buy it at a discount. Now, people then say, well, what is a discount? And it goes, well, it completely depends on where we are, what the market's doing. It's a dynamic problem. So when I say I want to buy Bitcoin at a discount, I want to buy when a bunch of people who didn't really want to sell it are selling it, right? Forced sellers. I want to be the guy who's like, I will take a nibble, right? I bought some yesterday at 52 and 51. And the idea there is like, if we go to 40K, right? Which who knows, we could do. I would rather have bought my Bitcoin at 52 than at 70. You know what I mean? Like, because if we're going to go to, if the magnet is to 40, if the world wants to take us to 40, I would rather buy my Bitcoin at 53, 57, 51, 46. I'd rather be buying it on those dips when my signals tell me, it's probably a forced sale. So the truth is, we don't know where it goes from here. I would say a large portion of the damage is done, but at the same time, right, just stay vigilant. And in the news I did yesterday, I put out, because these red days are scary. A lot of people probably haven't seen something like this before.
Yeah.
There is absolutely nothing wrong. And in fact, it's almost prudent, and the correct thing to do is to do nothing and just wait, right?
Yeah.
The worst thing you can possibly do is liquidate everything and say, oh, shit, I'll buy it back later. Most people should just wait and let the dust settle. Don't do anything. If you feel like tension and panic, the best thing to do is to do absolutely nothing, right? If you're not cool, calm, and collected, don't make any decision, sit tight, do nothing.
Yep. And how do you determine like whether it's a discount? You were saying that when people sell, like when they're forced to sell, but how do you know that they're forced to sell? Can you see something on chain?
Oh, absolutely. So there's a couple of things here. So the first thing is, during actual events like yesterday, basically no chart, line, technical analysis on chain, nothing will actually tell you what is good or bad, right? It's too violent, too fast, too furious. There's just shit happening all over the place. What on-chain is fantastic for, and what I covered yesterday, is that what we did see is an enormous washout of futures. 33% of all open interest got cleared in the last 7 days. Now,
Mate.
what that 33% is massive. Now, what that tells you is that futures and leverage is not a part of the picture anymore, right? We can actually put it on the shelf, and we probably don't have to worry about that for several weeks. That is completely and utterly clear. That's not going to be driving markets from here on. Every man and his dog who had a leverage position is gone. So therefore, spot and on-chain is going to be super, super useful, leading us back out the other side. What I'm looking for is how investor behavior changes. Do we actually see people selling the rip rather than buying the dip? Do we see like bear market sentiment set in? We did see that back in May 2021. But in March 2020, and again, this isn't the same magnitude as March 2020, but kind of similar energy. March 2020 was the start of went from 3K to 64K. So, these things can go in both directions. In many ways, markets have to go down to go up. I like to describe it as like a slingshot. You got to pull back the slingshot of fear, pain, right? People have to be terrified. And the absolute worst day is usually when you get towards the bottom of this thing.
Yeah.
Now, to answer your question about a discount, the question is, well, what are we measuring it against? What's like the baseline? And there's a couple of models that I'll use. You'll often hear me talk about realized prices, short-term holder cost basis, 200-day moving average, whatever it is. And I'll line up a couple of these things and say, well, if that's my like median line, the level that I'm measuring it against, how deep are we below that to classify as a discount? And we can look at some very simple things. Like I've got these charts that it's like a bar chart, a histogram.
Is there any chance you can bring this up, James?
Yeah, I can. Do you want me to share screen?
Yeah, that'd be great. I'll just stop sharing mine.
Let me load this thing up. But the concept here, and again, these charts won't be fully up to date because I haven't run it yet. Let me go present, share screen. Hang on.
As soon as it comes up. And shout out to everyone watching live or watching the replay. If you can do us a huge favor while James is bringing this up, and do us a solid smash the like button, share the video, and tag James on X as well. Make sure you're following James on X. The gentleman puts out such high signal. I'll bring this up.
All right. Let me know if you can see this. I think we can.
Perfect.
Okay, so what we're looking at here is just one of my many metrics, right? So this is the short-term holder MVRV. In other words, we've got the short-term holder cost basis. Think about this as the price at which everyone in the last 5 months, right? People who have recently stacked, this is their cost basis. Now, what we're looking at here is a distribution. Think about like a population of where has that particular metric closed on any particular day. Now, in this instance, I'm only looking at bull markets. So I've isolated bull markets of the past. And you can see this kind of darker green bar. Yep. This is now telling you that's where our current value is, right? So if we are in a bull market, right, and we can answer this question, if bull, if bear, if we are in a bull market, only 8% of all trading days have seen this metric at a lower level. That's what the S curve here is showing you. So only 8% of all days. In other words, 92% of all days have been higher than this in a bull market. So when I say, is it a discount? Well, what I'm looking at here, if bull, we have a 92% chance that this metric wants to go higher, right? So that to me is a discount. I would love to buy my Bitcoin when only 8%, 10% of trading days have been worse than this. That's fantastic. And you can actually see there's like this little cluster down here. This is where the hodlers step in and go, nah, you ain't going lower. This is my level. So we're talking about the zone that the slingshot has been stretched too far away from the mean. Now, we can actually do this because it's always prudent to check both sides of the equation, right? Let's imagine that we're in a bear market. Let's just assume, because it's always good to just consider both sides of the equation, where are we if we're in a bear? And you can see we're pretty much dead center, right? 62% is below, 48% or 38% is above. We're pretty much dead center. So in other words, if we're in a bear market, we're kind of in the middle. So, you kind of got to frame these things up. But if bull, we're at a very, very steep discount. If bear, we're pretty much exactly where we would expect to be. So there's not really a great deal of gravity in either direction. So, it's all nuanced, and we obviously have to confirm which way things go, but what's one approach I use to try and track, what is a discount and what isn't.
And how are you forming your thesis of whether we're in a bear or a bull market? What's given you the conviction to think that we are currently still in a bear market? Just before you jump in, we've had 18 months of solid up, 6 months of chop solidation, your words. So what's given you the opinion that it is still a bear market? Maybe we've got another 4 years of sideways or chop solidation and it's a bear market.
Yeah, so ironically enough, even though I just showed you a bull and a bear chart, I long ago actually stopped saying, oh, it's a bull, it's a bear. What I prefer to look at is what are the mechanics? What are the behavior of investors? Like, are we seeing sentiment that is shattered and broken? That's what bear markets are created, right? Because people then start to sell the rip, they panic. It's like this consistent, get me out of this thing. I don't want to hold it anymore. So it's more about understanding the mechanics of where the market actually is. Now, what actually defines a bear? Well, in the near term, we're below the short-term holder cost basis, which is at 65K, right? So we're quite some distance below it. And we're below the 200-day moving average. When we're below both of those two levels, I have to assume that we're in a bearish trend, right? You just assume a bear market bias until proven otherwise. Now, we have to also remember that, you can until we get above those levels, assume that bearish price action is probably going to dominate. At some point in the future, we will get above that, right? So the question is, does the 200-day moving average and the short-term holder cost base, do they come down to meet us down at this level, which would be like months of chopping around down here and refining our level? Do they have to actually come down to us, or does price go back up towards them, right? And that's the nature of the beast. What we're looking for is, when do the hodlers step in and put the floor in? When do we see seller exhaustion? People just go, oh, that's it, I'm out. I'm actually going to be very interested to see how the ETFs respond. I think we should get data in the next couple of hours.
Yeah.
Because my initial reaction is we're probably going to see some nasty outflows. That's like the default assumption. However, if we see a huge set of buy side, that's actually going to tell us a whole different story. And that has to be sustained. It could be a one-day event. But if we actually see people step in and go, you know what, I'm going to take these coins off the market. So we got ETFs. We can look at the same on the on-chain world. Do we see a huge capitulation? And then the hodlers go, nah, I'm setting this floor. So these are the kind of things I'll be tracking over the next couple of weeks.
Yep. I believe BitB published their flows bitwise there. I think they had about $6 million in inflows at the end of the day, which was quite interesting. I think they had quite a large amount of ETH as well. I feel sorry for the mistaken people that that bought that, but that's another conversation. We've got Samson Mao. I'll just bring it up really, really quickly. He put out a post yesterday saying, I'll bring it up. He's like permanent bullish. Samson Mao, $1 million Bitcoin in the next few years is far more likely now. The reason why I bring this up, James, is what you said before. We need to go down to be able to go back up. So coming back down here, being under the unrealized cost basis, how can people approach that mentally to realize actually these lower levels are good? We need them. They're healthy.
Yeah, and look, it comes down to experience. You stick around Bitcoin long enough, you hold it long enough, you're going to experience some of these nasty sell-offs. And it is a process. And the longer you spend in this market, the more you realize that markets actually help you develop life skills, a bit of resilience, a bit of robustness. When you come in your first cycle, no question, days like today, you're going to panic and most people are just going to capitulate and sell, right? And this is actually what I talked about in my Bitcoin 2024 conference talk. I basically talked through 2018 and 2019, which is when I came into the market. And I would buy high, I would sell low. I'm like, oh no, it's going lower. Don't worry, I'll buy back later. Yeah. And what I didn't know, right? So I show the price chart, I show what I did. Oh, look, I found this random indicator on Twitter. My favorite account is bullish. That means I should buy. But then what I do is I bring in some of my on-chain metrics and say, well, what was actually going on? Whilst I was saying, don't worry, I'll sell now and buy back later. What was actually happening is every other dumb money new investor like me was doing the exact same thing, selling all the coins they bought high, low, and the smart money was stepping in and buying it. And then when the market rallies, I find my favorite indicator. I find some random dude on Twitter. I'm like, hey, this guy's bullish. I'm buying when those guys who bought low are then selling high. So on-chain data is all about doing the opposite of what your natural human instinct wants to do. We are designed to be wrong in markets. This is why 95% of traders suck and they lose money. This is the nature of the beast. The human condition, the natural order is for us to be wrong. And on-chain data, for me, at the very least, helps me make better decisions by saying, well, what are the dumb money doing? What are the smart money doing? Trying to align myself with those guys.
Yep. With the on-chain data, it's like what's happening right now, and then you can look back at the past, but it can't show us the future because it hasn't happened yet. Can you still use it to be able to project out to the future, or you're just using it sort of like minute by minute or hour by hour to be able to make that snap decision? Like you've come up with, if A happens, I'll do this. You see A on on-chain data, you do that. Or like, how do you actually use it and implement it?
Yeah, so I definitely do not try and predict the future because no one can do it, right? So a line I've been using recently is I do not try to predict the future. I just prepare for it. So our tagline at Check on Chain is that we're your Bitcoin personal trainer. It's like being at the gym, right? When you're at the gym, you're not, and you're training for a sports event. You're not training for the exact way that the game is going to go. You're not training for the exact time that the ball is going to land on that side of the pitch. What you're training for is that in these set of circumstances, here's how I operate. Here's how my team operates. Here's how I think about things. So it's more so about, and actually, if you want to bring up the share screen again, this is a chart that 100%. I put out a little while back, which was trying to prepare people, right, for what could or should happen. Now, I'm pretty sure that I released this report probably somewhere up around here. And the idea is that we traded below the short-term holder cost basis. We were coming in towards the 200-day moving average in the green. And what I've basically put here is a lot of people use Fibonacci levels. For whatever reason, Fibonacci levels are really, really interesting because the human condition, whether it's like seashells or human behavior patterns or whatever it is, these like weird mathematical numbers just seem to work. And a lot of people use Fibonacci levels. Now, I don't particularly use them, but what I wanted to demonstrate with this report is more often than not, where you've got these big key Fibonacci levels, right? You will almost always have a bunch of on-chain cost bases, points of psychological stress, whatever it is. They always line up at the same position because at the end of the day, markets are emotion plotted against time. People making good decisions and bad decisions plotted against time. And my general thesis was down here in this red zone, this is below the 61.8%. Usually speaking, if an asset trades below its 61.8%, you're probably going back down from whence it came, which is back down here to like 40K. If, however, we don't close below that level and we stay up in the 61.8 to the 50, this blue line is called the true market mean. This is the average cost basis for active investors. We don't care about lost coins. We don't care about Satoshi. We don't care about all the coins that are long dormant. This is the average cost basis for people who are active in the market today. And interestingly enough, it is down here at 46.8K, sitting within that 50. This is like the level of last support. This is the bull's line of last support. Yeah. So for me as a hodler, the closer we get to that blue line, the more comfortable I am that the bulls are going to mount a serious defense, right? So look, again, even if it did get down to 46K and then goes to 30, I'd rather have coins at 46 when it goes to 30 than coins at 70 and then it goes to 30. So the idea is just to like prepare people for what could happen and know what your decision matrix will be. So when you get down to 46K, if and when, you're not terrified, you're going, that's my level. I'm going to step in. I've already thought through these mechanics. That's where I become interested. I will step in at those levels and deal with the consequences, right? Because that's what we do as hodlers. You got to put the floor in at some point, but I've done those calculations beforehand and I'm doing it with a clear head and not terrified.
Do you know if, like with traders, obviously Bitcoin has become something to trade with Wall Street. They're watching these charts. Is that sort of the level where people are starting to go leverage long?
You can look for that kind of thing, but what will generally happen, again, this is all about markets being contrarian spaces. At the time when everybody is the most bearish, right? What actually happens? Let's just imagine for a second we go down to 46K. Let's just put that into the perspective. The headlines on every financial media site will be the most bearish thing you've ever seen. Every trader you've ever seen will be absolutely bared up and they'll be getting ready to short. Because what happens is people actually, and here's an interesting anecdote, people have short this market all the way into the ETF highs. They turned bullish and they started leverage longing up there at 70K. So they short from 40K to 75. Then they decided, okay, I'm wrong. I've got to stop shorting this thing. Now's the time to go levered long. They go levered long at 70. We go to 53, right? People always do the exact opposite because we feel comfortable. We want it like the trend is going lower. People are like, okay, finally, Bitcoin's going to zero. Now's the time. They get so comfortable with the downtrend that they actually go levered short at the bottom. It's the complete opposite of what you're supposed to do, but this is the way that the human condition works. People always do the wrong decision. And what I try to look for is data that tells me, okay, the dumb money, the 2018 checkmate, what was he be doing right now? He'd be opening a levered short position and going max short. That's the point that I want to be stepping in and saying, sorry, mate, I'm taking you to the cleaners.
So on that note, is there any point within the market where you are stepping in with leverage yourself personally?
No, mate, I stopped using leverage a long time ago. My lesson, I mean, we all have to go through that process. I learned my lesson back in March 2020. So I was using options and I was right for over a year. I started, basically levering up, using options to actually get, I had a really, really strong position going all through 2019 and I held it for all of that year. And then March 2020 came through and liquidated everything that I had. So it was at that point in time, I was like, I probably shouldn't do this anymore, right? Just obviously I could probably do it now, right? And sometimes I jump in there and have a bit of a gamble. But at the same time, I find for me personally, I allocate my energy to actually thinking about and analyzing the market. I have a much clearer head. If I've got a $100 leverage position on, I worry more about the $30 that I'm down on that than my entire net worth, which is Bitcoin, right? I don't think about the spot position. I worry about the $30 I'm underwater, and it just consumes too much of my brain power. So for me, I prefer to do good analysis, generate value for people. I like to think about this stuff. And that's where I get the most personal satisfaction. And ultimately, life is about pursuing what you enjoy doing. And I enjoy analyzing Bitcoin. I enjoy kind of really getting to the mechanics of what's going on. And that's where I like to spend my brain power rather than worrying about some perpetual future. Yep.
I like the word you use, that you'll have a little bit of a gamble. And that's the exact same way that I think about leverage as well. It's, if you've got money to burn and you want to do that, go for it. It's your money, it's your choice. But for the majority of people, it's probably not the best. So I've got a chart that's pretty pertinent right now. What we saw in the last 24 hours, like really in the scheme of things, is just another day in Bitcoin. It's not anything to really be surprised about. But for people that have just come into the market, sure, like it feels absolutely crazy. Do you have a way to be able to educate people that this is just perfectly normal? And like my opinion, at least, and I'd like to hear yours, is Bitcoin's going much, much higher. Whether it's towards the end of the year, they cut rates, money printing fires up. If they cut rates, we may get a drop first off and then absolutely pump for the next 12 months. Or even if we're sideways for the next 4 or 5 years, for me personally, I actually really do not care. I just think inevitably the world's hardest, scarcest asset, the best form of money humanity's ever known. It's decentralized. It's unconfiscatable. Nobody can shut it down ever. I have maybe too much conviction, 1,000% conviction that we are going up and to the right forever. But like, what are the ways that you're thinking about it? How are you communicating that we will get 38% drops, 29% drops, 50% in times like COVID, when you lose half your portfolio in a couple of days, and then like time and time again, it just keeps going up and to the right when you zoom out.
Yeah, so I think the right way to think about this is markets, you are trading against yourself, right? So if you just take stock, think about how you feel today, think about how you feel yesterday as it was selling off. What was driving that emotional response? And I would argue that for a lot of people, right, the natural response was that they bought when they thought Trump was going to announce some kind of strategic reserve and that we were going to do exactly what you just said. Fundamentally, Bitcoin has to move, right? So we're at $68,000. People are like, yes, now's the time. They probably bought a bunch. The feeling that you're experiencing right now is almost certainly tied to the fact that you bought at 68K and we sold off down to 49 at the lows, right? So you are anchoring to your previous last couple of buys, right? You feel bad because you're underwater on those instances. My general kind of approach is, well, how about I don't buy at 68K, right? How about I don't buy when a bunch of other people are taking profits and the market isn't quite there yet? What I would rather do is just wait, right? And on those 38% corrections, I'd rather be buying when it's down 32%, right? I'll deal with the 5% extra wicking and those kind of things, but I will wait to be the buyer on those 38Ks. And it's almost like everyone has their DCA schedule, right? That's kind of the general approach, right? You want to be building a position in Bitcoin for the long term. The better approach is to just move your DCA rather than buying when it feels good. Just shift it slightly to the right and just buy when it feels absolutely god awful. If you are buying Bitcoin and your stomach is not falling through the floor and you feel absolutely horrible doing it, it's probably not the best buy, right? So that's the way I would like to think about things. Like, you've got your monthly DCA. Try and time it for when it feels the absolute worst. If you are buying Bitcoin and it feels fantastic, more likely than not, the awful bit is coming and it's going to be worse because you're going to have no dry powder and you're going to have bought at a high price. Just shift it a little bit to the right and look for those points when it feels awful. That's how I deal with it. I try to buy my Bitcoin at the deepest discount that I possibly can. And that is when you get these big, nasty corrections. Because as you saw in that chart before, they happen all the time. And people keep thinking you get naturally into this vibe. It's like it's going up forever because it is the scarcest, hardest, best money of all time. The nature of the beast is it takes time to get there. And there's going to be ups, downs, and sideways all the way along the journey.
So what are your thoughts then? Like, what do we see over the next 12, 18 months, if you were? I know you said you don't really predict the future, but do you think that it is going to trend up over the next 12 months or so? I guess like the probability of it.
Yeah, absolutely. And look, the nature of the beast is the one thing, right? A lot of us is tied to it. There's election odds. There's, what's going on in the Middle East. There's conflict. There's the Japanese carry trade. There's all these dynamics. The one thing that is not being voted in is fiscal responsibility. We're not voting that, like, the US is not going to vote in a more responsible government. So, it's going up over time. It's just a process to get there.
Yeah. Like my mum, I've finally, after like 4.5 years, convinced her to turn her super into self-managed super and buy Bitcoin. And, this conversation's been going on for 4.5 years. And it would have been better 4 years ago, or really any time in between. But finally, she's done it. She watched a video with Tony from the Bitcoin Way and said, I'm ready to do this. And I said to her, Mum, it's volatile. Whether you buy it at 45,000 or 75,000, really in the scheme of things, it actually does not matter. If you're holding it for the next 10 years, whether we're only $100,000 in 10 years' time, $1 million, $10 million, my belief is it's going to be much higher. It's going to outpace inflation. If we're to look at the history, 60% year over year, it's gone up over the last 10 years. I think over the last 15, it's 200% compounded interest. Do you think that type of model, as the market cap gets bigger and bigger, is going to break down, and maybe these 4-year cycles, we don't go from bear to bull to sideways and then back into it again? Like, do we get to a place where it's just hyper Bitcoinization, or just the market cap so big it's acting more like gold?
Yeah, I mean, it'll get there eventually. That'll take a decade, right? Probably 2 decades. It'll take a long time for that process to happen. But certainly, I'm working through the logic of what I'm going to write about, because I want to talk about this 4-year cycle idea. The 4-year cycle has obviously been in play, right? And there's a whole lot of different factors. There's halvings, there's macro cycles, there's political cycles. There's all this stuff that just coincides with a 4-year frame of reference. But ultimately, the world is always variable. I find that anchoring to things that may not necessarily have the kind of, a lot of people say, oh, we all-time high before the halving. Okay, who said that wasn't possible, right? At the end of the day, we've got 3 examples, right? You're looking at 3 data points and saying, oh, this time is different. It's like, well, not really. It's a completely arbitrary comment that we can't all-time high. What matters is the demand profile, right? Who's actually stepping in to buy this thing? Who is the seller? And markets are all about supply and demand. So, could we have a cycle where we don't trade for 4 years? Absolutely, right? There's no reason why that can't happen. And in many ways, I think that anchoring to these like arbitrary, it must be 4 years. Now, I say that but at the same time, there has been the 4-year cycle. So this is this kind of concept of trying to track what the market sees. Why does the 200-day moving average work? Why do we find support on it? Why do we find resistance on it? It's because every man and his dog looks at the 200-day moving average. It's like one of these self-fulfilling prophecies. So in a way, the 4-year cycle will have a little bit of that inertia. But over time, that inertia will change, evolve, degrade. I see a lot of people say, oh, look, the top will happen on August or October 2025. And it's like, based on what, bro? Like, based on what information? Oh, just because, left translated cyclists. Like, it's completely arbitrary. So what I really try to do and try to help my subscribers understand this, don't anchor to these arbitrary things. Look at the mechanics of what creates a bear market. What actually creates a bear market? It's when too many people buy too many coins at too high of a price. You'll hear me talk about chop consolidation. Chop consolidation is a process of digesting a move. When we see things like top heaviness, that's when too many people buy too many coins at too high of a price. And we saw top heaviness kick in at about 65K, right? So from that point onwards, 65K, it's like, guys, we need to be careful because there's a lot of people holding too many coins at too high of a price. We're currently top heavy. That's going to create panic. Now, that doesn't mean the market is over. What it means is that we just have to be patient, right? The opportunities are probably going to be there to buy Bitcoin at a discount. The probabilities are higher. We're going to head lower. That's an opportunity, not a risk. And that's the way I think people should really think about it. It's like, don't look at it in terms of bull and bear. Look at it in terms of what will you do in a certain set of circumstances.
Yep. And when you're like forming your base case, do you think about like the price to mine 1 Bitcoin at the moment? Does that come into it at all at the moment? Because I think it's $64,000 currently.
Yeah, look, I mean, mining is a brutal and horrible business, right? I don't know how I suspect that mining we will always have bankruptcies and we will always have internal churn. Mining will never be profitable for 50% of all miners at all times. That's just the nature of how the difficulty adjustment works. It makes sure that 50% of miners go bankrupt over any 4 to 8 year period. It's just how it works. So miners, I assume, are just always selling. Right? In many ways, people focus on, they're like, oh, look, hash ribbons have flipped over. And yes, they will sell their treasury. And yes, they tend to be pro-cyclical and they sell at the exact wrong time, just the same as everybody else. So in that kind of nature of the beast, miners are just like, kind of like dumb money in that regard. I'm not saying that miners are dumb. I'm just saying that their behavior patterns, historically speaking, have been to hodl on the way up and then not sell, and then they sell on the way down, right? They do the exact opposite of what you should be doing. And strangely enough, this is a concept I've been playing around with. I think that mining is a fascinating industry. I can't help but think that smaller, more nimble entrepreneurs can, because the biggest problem with mining is actually the capex. You got to buy the rigs. And that is a huge capital expense. You're basically buying a call option. You're buying rigs that have about a 4-year lifespan before they're obsolete, and you need to mine as much Bitcoin as you possibly can. Now, if you buy those miners at a high price, when Bitcoin is very high, you're going to pay a huge premium for them. Big companies, big publicly traded businesses, they have shareholders to look after. They've got all this company inertia. It's much harder for them to buy and sell their rigs. But imagine you've got these little small miners who can just move around between disparate power around the world, move a shipping container around, sell the shipping container at the top, sell the rigs at the top. Big companies can't do this because they've got all this infrastructure and all this stuff. Small entrepreneurs can be able to actually offload their rigs and get that cost basis off their balance sheet, wait for a more opportune time, step back in and buy another shipping container with new rigs, right? So I think that mining will naturally decentralize towards these small entrepreneurs who can find cheap energy and actually manage the cost basis of their rigs much better than big publicly traded companies.
Yep. I want to dive into your thoughts on sort of the wider macroeconomic things. But before we do, what's going on is we are at block height 855,561. It's TikTok next block. We are 194,439 blocks away from the next halving. Current price is 54,845. So we got a $10,000 day in the last 24 hours to the upside as well as the downside. Sats per dollar. The deal is absolutely insane. 1,823 market cap has come down from, I think, a higher 1.34 to $1.08 trillion. The last block, check that out, 1 hour, 44 minutes ago. I'm not sure if that's quite correct, but if it is, we may be looking at a difficulty adjustment down. The last one was up 10.5%. Before we dive into a little bit about your take on Japan and the whole world blowing up and how people should probably just chill a whole lot more, I know we've touched on that. What are you doing with your business? I'd like you to bring it up. I think it can help a lot of people. Shameless plug for everyone watching. James is absolutely amazing. There's no incentive for me to be able to bring this up, lead them into it. It's just high signal, valuable content that I think a lot of people can benefit from. So the floor is yours, mate.
Oh, thanks, mate. No, I appreciate it. Yeah, I mean, we launched, me and my best mate. We've known each other since we were 3 years old, actually. So we spun out Check on Chain as basically it's a Substack newsletter, and the thesis of the whole thing is really like it's kind of a lesson from my own journey as a hodler. I came in, I knew nothing about the market. The volatility shook me up. I bought at the wrong time. I sold at the wrong time. I thought that I was a trader, and I went down and found all the technical analysis and all this kind of stuff. And I just realized that, like most people, you spend enough time in Bitcoin, you realize, hey, I don't really want to spend all this time I want to know what's going on, but I don't really want to be the one doing all the analysis and trying to work out what RSI means and all this stuff. It's a full-time job. Now, the same way that you would pay a lawyer or a doctor or a dentist for like a service, in many ways, we're trying to provide hodlers, the tools, the information, the assurance, just help them understand what's going on. Because even though the market's down, when people know why it's down, what are the mechanics that's driving it, it's not uncertainty, right? And uncertainty is what makes it hard to hodl. The volatility makes it really, really difficult to hodl. So the whole kind of thesis behind the Check on Chain newsletter is I do spend all my time looking at the data. And I look specifically at the on-chain side. It's what I'm passionate about. It's what I love doing. And it's full of signal. And so few people have done the proof of work to really understand it. It's a massive rabbit hole. It's fantastic. But not everyone has the time to do that. We've got jobs. We've got all this other stuff. So the purpose of the Check on Chain newsletter, we call it your Bitcoin personal trainer. The idea is like to just get people prepared, thinking about these mechanics. And we're not trying to predict the future. We're not trying to do price alerts. We're not saying buy here, sell here. We're helping people understand how the overall tides are changing and turning. And it helps people hodl through that process, right? So it's not about predicting the price. It's about preparing people for the possibilities so that when it happens, people know they've done their own computations today. Okay, when this happens, I'm not scared. I'm actually prepared. And that's the way we like to think about stuff.
No, that's absolutely awesome. What I'll do is, as soon as this video is finished being live, I'll put your X account there. And is it just checkonchain.com?
Yeah, so checkonchain.com, you'll find the Substack newsletter, but we've also got a charting website, which is charts at checkonchain.com, but you'll find that all through checkonchain.com. And, basically all on-chain charts you could ever want. I built Check on Chain, the chart suite for me, right? Every chart you could possibly want is on there. We're in the process of refactoring it to make it a bit better because at the moment it's literally a piece of handwritten HTML by me. I'm a civil engineer. I don't know how to write code. So it's very, very primitive, but it does the job. And it's got pretty much all the charts you could ask for. And the big difference, I think the big difference between Check on Chain, which is actually strangely enough the oldest on-chain website. It's been live since block 558,000, I think. So it's one of the oldest on-chain websites. Rather than just having like, oh, here's the metric, good luck. The way that we've approached it is I try to bake the insights into it. So when that metric is doing something important, the price chart will turn red. The price chart will turn green. The idea is it's trying to tell people where we are in the grand scheme of things, right? Give you the time to insight as short as possible. You can see when the market's doing something, not just hoping, right? And going, well, now I've got to do all the proof of work and work it out myself. Trying to just make it really easy. So, hey, look, it's red. I should probably think about it. You know, is this overheated? Is it too much? Whatever it is.
Do you want to bring that up and just give us a little sneak peek?
Yeah, sure. Let's find something interesting.
I think it's all pretty interesting on there, James, but we'll give you a minute to do that.
Yeah, no, we're loaded up. So this is the MVRV ratio, the Z score. A lot of people have seen this metric. It's basically the unrealized profit or loss held by the market. So think about this, like the higher this metric is, the more green everyone's portfolio is. The lower it is, the more red there is. So you can almost think about it like a gauge of sentiment. People are happy when it's high and not so happy when it's red. However, notice at the top of the price chart is when everybody's thinking, great. This is that contrarian thinking. When everybody is super in profit and you're feeling really, really good, probably means a bunch of people are going to start selling and taking chips off the table. So the idea here is that the price chart will turn red and orange when things are cautious, when stuff's getting a little bit too hot, too many people are in too much profit. It may not be you selling, but there's a bunch of other people who are more than likely going to start selling, and that's what overwhelms the market over time. So, you know, it's just about trying to understand where are those points of seller exhaustion, green and blue? Where are those points of exuberance and just irrational, like super cycle, it's going up forever? It's probably going to be orange and red.
Yep. Where we are in the bull market, I still think we've got a fair way to go, and it'll be what it'll be. But right now, when you're seeing this flash red or yellow or orange, depending on the color of your screen, are you taking any action now, taking a couple of chips off the table, ready to buy lower, or are you just using it just to be able to buy in at the moment? You're keeping your stack as your stack?
Yeah, no, I mean, for me and my kind of hodler's journey, I'm still in accumulation mode, right? So I'm not interested in selling anytime soon. The market will just simply, like, my price is much, much higher. And that's okay, right? To me, I'm going to hold it for a very long period of time. So I use this kind of stuff to not buy high and to sell, and to, not buy high and buy as low as I can. That's the way I like to think about this stuff. You know, for me, what is Bitcoin for? For me, I'm saving it to improve my life. It's my savings. As Wizard of Oz would say, what do you use your savings for? Whatever the fuck you want. What do I want? I want a house, right? I want a home. So I will take some chips off the table when the time is right, when the price is right, to enable me to buy the thing that I want, which is a house. I'm not going to sell the whole thing. It'll be a small fraction of it, but it will be enough to just get me on the move towards doing what my savings is for, which is making my life better, making my kids' life better, helping yourself, your family, just improving your life. That's what your savings is for. And ultimately, that's what I think about Bitcoin as.
Yep. I'm sure you probably get a little bit of pushback from like the hardcore Bitcoin maxes. I never sell your Bitcoin, but 100% Bitcoin is there to be able to improve your life, maybe not sell 100%.
What's the point of saving in this asset if you're not going to make your life and your family's life better? What's the point? There's no point to this, right? You're just basically a hoarder. Use it for what it's there for, and that is improving your life.
Yeah. I think as you dive down the rabbit hole of Bitcoin, like I wanted to get a plane 4 years ago, and instead of buying one, I put it into Bitcoin. And I've kept wanting to buy one, but with Bitcoin where it is right now, I'm like, no, I can just wait. And Bitcoin's taught me that lesson that we can have whatever we want in the world if we work hard enough, if we make the right decisions, if we focus. Definitely need a little bit of luck. But when you can zoom out and be like, I don't need to have everything today. Like, I don't need a house, I don't need a plane, I don't need like a third car. You know, we have a house. But like, we don't need all the toys now, and it allows us to be like, all right, what's actually more important? Whereas when I was keeping Fiat in the bank, just go out on frivolous stuff. You jump on Temu and buy these little trinkets or whatever. And Bitcoin's changed that. And then it's hard now for me to be like, okay, like we can go out and we can use some. And I don't think where we are in the market, like it's so funny, like over the last 4 years, my internal self-talk's changed so much. Like I can just get whatever I want to be like, actually, do I really want that? Do I really need it? Is it going to make my life better in any way?
Down money, low time preference thinking.
It's absolutely amazing, and it sort of just happens via osmosis when people read the books, and study Bitcoin. I want to get your thoughts on sort of the wider market and what's happening with Japan. We touched on a little bit, but before we do, a massive shout out to today's sponsor. 45 seconds, I'm going to play a quick ad. These people are the best in the space, helping you with self-custody. A quick message about today's sponsor, the Bitcoin Way. If you still have your Bitcoin on an exchange or you're using a hardware wallet that's not air-gapped, it's not open source, reach out to the Bitcoin Way. First 30 minutes, it's free. The team has over 25 years cybersecurity experience. They can help you take your Bitcoin into self-custody. Safety Moose, the author of the Bitcoin Standard, endorses this team. They'll never touch your keys or your coins, but they'll empower you to become self-sovereign. They can teach you how to run a node, can assist with multi-sig, cybersecurity, inheritance planning, running VPNs, and so much more. And the team, they can even help you obtain a second passport. Bitcoin, it's generational wealth. Learn the skills today. I've put a link at the top of the description. And again, the first 30 minutes is free. So the first 30 minutes is free. It got cut off. But having a second passport, there's a whole lot of crazy stuff happening in the world, James. It's probably not a bad idea. House prices, you're saving for one. They're absolutely bonkers. We're down in Victoria looking for a citadel as well. And the property market here in Australia has gone absolutely insane. The whole world really, it's been accelerating to clown world for a very long time since we went off the gold standard in 1971. COVID really accelerated that 2020. But like, what are your thoughts with the carry trade unwinding, having this major drop? How are you sort of thinking about the world, the state of the place? Not everyone understands that Bitcoin is this flight to quality, this flight to safety. It's probably their best chance to be able to live the life that they dreamed of as a kid, whether it's a house, a car, a boat, a plane, to be able to travel, just to be able to have the time to do whatever they want. The world is fairly chaotic if you don't have a sound money standard within your own life. How do you sort of think about what's going on in the wider world?
Yeah, I mean, the world's at a bit of a pretzel at the moment, right? We've got conflict over in the Middle East, and we've got conflict in Europe. There's the fiat system is starting to reckon, I think is the right word, with some of the long-term debt and leverage that's been built into it. I mean, this is the thing that's so interesting, right? You'll see when Bitcoin sells off, they'll be like, oh, look, Bitcoin was just all this levered degenerate traders, $1 billion in liquidations. It's like, bro, the Mag 7 wiped out trillions of dollars in the last 3 days. So it's one of these things, like, keep things in perspective here. The world is going through this yen carry trade. It's massive, right? Everyone's suddenly becoming a yen carry trade maximalist, right? They're like, oh yeah, I know all about this thing. It's a really complex dynamic. But the simplest way that I can describe it, for decades now, the yen has had a very, very cheap interest rate. So you can borrow yen very cheaply, sell it for dollars, US dollars, and then go and buy something with it. So if you borrow the yen at 2%, 1%, 2%, 0.5%, whatever it is, you borrow at a very cheap rate. You then go and trade those yen for dollars, take the dollars, and you buy something else, right? You could buy US Treasury and earn 5%. You could buy Bitcoin. You could buy US equities, whatever it is. You go and buy something else. But now what happens is the yen is strengthening. And strangely enough, this is the same mechanic as what happens when the dollar gets stronger. Countries who have this dollar-denominated debt, if the thing you borrowed gets stronger, it's harder for you to service and repay that debt. So people are selling the thing that they bought to get the dollars, swap them back to yen, and then repatriate that back to Japan to essentially close out their yen short. So because this has been going on for decades, there is an ungodly amount of money that has been levered up using cheap Japanese yen to then go and buy everything else. And what we're seeing is the first phase of that unwind as people sell the thing they bought to close out their yen short.
With that, do you reckon Japan tries to devalue the dollar and sort of stop the systemic chaos, or are they just going to stay what they're doing and let the rest of the world deal with the consequences, I guess?
Yeah, I mean, I'm not going to pretend to have any kind of insight in how all this stuff works. A lot of people are saying, oh, the Fed needs to cut rates. But if the Fed cuts rate, all it does is actually make this problem worse. The world is in a bit of a hot spot because these dynamics are so big, so complicated. There's not a great deal of things they can do to kind of resolve and solve this thing. At the end of the day, the system is designed based on debt, right? The entire fiat system is a debt-based economy, the scale of which it's impossible to wrap your head around. I think Joe Consorti put out a fantastic tweet just a couple of weeks back, and I might get the numbers wrong, so don't quote me on it. But it was like if you got paid, I think it was if you got paid $1 million a day since year zero, right? Jesus is walking the earth. You get paid $1 million a day, you would still have less than 85% of the amount of debt that the US has added in the last 100 days. Like these numbers,
Wow.
these numbers are insane, and that's just the last 100 days in one country. That's just the deficit. The numbers of this thing is just so big, no one can really wrap your head around it. And this is where, like in the short term, markets are going to go all over the place, right? Completely volatile. Trying to predict it is a fool's errand. Prepare for it. Don't try and predict it. In the long term, right? And when I say long term, we're talking about years. There is only one option. They have to reset the debt. And the only way they can do that is via inflation, right? Governments, since before the Romans, the only way that they deal with this is by clipping the coins, right? They make the money worth less because the debt is locked in today at today's fiat value. If there's more fiat in the future, it's easier to service those debts. So the whole world, and this is where it becomes really interesting. It doesn't matter if the yen tries to devalue. It doesn't matter if the US dollar tries to devalue. If one devalues, they become more competitive in the export and import market. They become more competitive. The other guy is going to have to devalue because they also want to be competitive. So it's this like collective, relative, everyone has to devalue the money. And this is why gold, Bitcoin, scarce properties, scarce assets, things that you can't print is essentially what's going to perform, right? And it's going to be choppy. It's going to be all over the place. It's going to be ups and downs. But at the end of the day, fiat's really going to do a pretty horrible job. Now, and again, this is why it matters so much in the immediate term. Fiat is over the long term going to lose its value. Bitcoin lost a whole lot of value in the last 24 hours. However, if your cost basis is near the bottom of these big sell-offs, you're going to outperform everything, right? So just simply getting your DCAs to be at a better position, not only will you benefit from the depreciation of the fiat, which is like just buy at any price. That's one approach. But what if you could benefit from the fiat debasement whilst also getting a much better cost basis? That's the way I like to think about this stuff, right? I'd rather benefit from both the appreciation of Bitcoin and the devaluation of fiat.
Yeah. It's such a shame here in Australia. Like we have 30-year mortgage loans, but you can't fix it for 30 years. Imagine if you could, because over the next 30 years, even if you fix it at 4% interest or whatever, I think the inflation is, you'll just be able to pick the money off the street if you could have a fixed rate for that long. And unfortunately, it's like playing against the casino. The casino always wins.
Yep.
With that, I've got the fear and greed index here. Is this a chart or a metric that you look at all? Does it serve any purpose? Is it helpful for any reason? Obviously, you just jump on X and you can see that people are fearful. I'm feeling quite excited at the moment with these opportunities, but is this helpful in any way?
Oh, look, it's a very, very crude finger in the air kind of metric. It's not something that I look at ever. More often than not, it will line up with things, right? So for me, however they calculate this is going to be on volatility and tweet volume and all that kind of stuff. For me, show me when people are capitulating, right? I'll go and look at my on-chain tools and be like, look, there's a bunch of guys who are capitulating at the lows. That's fear, right? I'll step in and buy that. So to me, it's a very, very indirect measurement. It's obviously very memeable and easy for people to understand. In terms of signal, it's like, plus or minus 50%, right? Error bars. I'd rather get towards like plus or minus 5-10%. That's kind of where I like to operate. So it's not quite precise enough or mathematical enough for me, but it tells a very similar story.
Cool. Yeah, I bring it up often enough because I don't feel fair, and it sort of shows me that the rest of the market is feeling that, and maybe to be a little bit more. Yeah, maybe to be just a little bit more empathetic and realize that, hey, maybe when it's in fear, this is another good opportunity to be able to just check ourselves and our thesis. For everyone watching, tomorrow I've got British Hodl is coming on live, 7:30. It'll start an hour before. But James, I'm going to hand over the microphone again back to yourself. If you've got like a final thought where people can go, definitely check James out, both on X and checkonchain.com. I'll link that as soon as the live is over. I'll put that there in the description for everyone. But yeah, if you a message maybe for people that are a little bit fearful at the moment, that this is not uncommon. It's perfectly healthy. It's natural. It's a great opportunity when people have a long time horizon and they're not just here to get rich quickly, but not. Like Bitcoin's the best hedge not to get poor quickly, I think, and then to get wealthy over time.
Yeah, and look, I think just to kind of leave people in events like this, it can be terrifying, right? Particularly if this is the first time you've seen a really nasty, angry red candle. I had a couple of points in my recent newsletter. The first one was that these things are violent, fast, furious, but they're ultimately temporary, right? These big candles, they're usually technical in nature. There's a bunch of forced sellers, big entities. They're unpredictable. They're pretty nasty when they happen, but they do in fact pass over, right? These things are a temporary phenomena. There is absolutely nothing wrong with doing nothing and just wait. Just allow the market to find its level. Checking the 1 hour price chart right now is probably the worst thing you can possibly do. It will be completely unhelpful. All it will do is stress you out and you will get no benefit from it. Very, very few people should really be on the 1 hour chart, the 1 minute chart. It's just not useful. I know zoom out is a kind of bored old trope, but at the end of the day, getting really down into the like fine-tuned weeds, unless you're a professional trader, and I give this kind of piece of advice, get a piece of paper, right? If you're kind of on the 1 hour chart and you're trying to work out what's going on, get a piece of paper and write down what your edge is. What is your advantage in the market? If you struggle to put something on that piece of paper, you probably shouldn't be on the 1 hour chart, right? People can develop it, and there's no reason you shouldn't practice and get better at these things. But unless you consciously say, what is my advantage? Getting down to that level of granularity is probably not going to help. It's probably going to hinder. And the last thing I'll leave you with is that Bitcoin's going to be just fine, right? These events happen. Bitcoin is the best asset to be holding at this point in time, but there's obviously good prices and bad prices at which to get it. If you look back, $50,000 back in 2021 probably wasn't a great price. $50,000 now, probably starting to get towards a better price, right? Because a lot of the risk has been taken out over time. Bitcoin is approaching that kind of global reserve asset type status. If you told me we would be, having 2 presidential candidates shilling this thing at a conference in 2018, my head would have exploded. So we are in a very, very interesting world where Bitcoin's going to be just fine. The short term is chaotic and noisy, but it will pass over, right? And the market will be fine. It's just about managing your own decisions. You cannot control the tide. You cannot control the market. All you can do is make better decisions. And the best way to do that is to think about it before it happens.
James, you're a legend. You're one of the most requested guests to be able to come back on. I definitely urge everyone that is watching to follow you. Are you still doing your YouTube channel or no longer?
No, so we are trying to spin up the YouTube channel. We were talking about it before air, but basically I put the vast majority of my work into the Substack, which also has video. So every post comes out with written and video. Essentially, I like providing value for people, and part of that is just like a value for value thing, right?
Yeah.
For my paid subscribers, you get all my work all the time at the best, highest quality. What we found is that if you do free material, people don't pay for it and they're not interested. And as a result, you kind of end up getting anchored to sponsors. And I would rather spend my time analyzing Bitcoin and doing a good job rather than worrying about trying to find the next sponsor. So we focus a lot of our energy. I focus a lot of my time on the paid material because that just allows me to do what I do best, which is analyze Bitcoin as clearly and concisely as I can and focus on what I'm good at.
Yeah, and you do that to a very, very high standard. For everyone watching this, the most that we've had live, if you're new to the channel, hit subscribe, notification bell as well. Go live 5 days a week, Monday to Friday, 7:30 a.m. Australian Eastern Standard Time. Today was a little bit late after getting back quite late last night. But James, thank you so much for your time, and hopefully we can get you on more regular. Your insights are always very valuable, very calming for the market, and I think if people are just learning to buy, stack and chill, but also using these on-chain metrics to be able to buy at a lower price, it's going to help when we have these big drawdown days, just for people to be calm, because Bitcoin is going up and to the right forever.
Good on you, mate. Thanks for having me on, and stay humble, stack sats.
Cheers.